Buckle up, investors. The stock market is poised for a potential surge, fueled by whispers of a trade truce between the U.S. and China. But is this optimism justified? Or are we setting ourselves up for another fall? Let's dive into what's driving the market and the key events to watch this week. Market overview. A ray of hope on the horizon. Early Monday morning, futures contracts pointed towards a positive opening for the major indexes. Dow Jones Industrial Average futures were up approximately 118 points, 0.3%, signaling a potential rebound. S&P 500 futures also climbed, gaining around 0.4%, while Nasdaq 100 futures, heavily influenced by tech stocks, saw a rise of about 0.5%. This positive momentum suggests investors are cautious. The primary driver appears to be renewed hopes for a thaw in the trade war between the United States and China. President Trump's recent comments suggesting that the U.S. is going to do fine with China have offered a glimmer of hope that tensions might be easing. This comes ahead of a crucial meeting in Malaysia this week between U.S. Treasury Secretary Scott Bessent and China's Vice Premier He Lifeng, where both sides are expected to discuss key trade issues. Think of it like this: two boxers entering the ring after a lot of trash talk, now trying to find common ground before the bell rings for the next round. Trump specifically mentioned rare earths, fentanyl, and soybeans as areas where he'd like to see progress. Rare earths are critical components in many high-tech products, while fentanyl is a major concern in the opioid crisis, and soybeans are a key agricultural export. Resolving these issues could signal a significant step towards a broader agreement. The market is betting on a deal before November 1st, the date when U.S. tariffs are scheduled to increase, a deadline that adds urgency to the negotiations. Remember Friday? Equities initially opened in the red due to jitters surrounding the health of some regional banks, a concern amplified by discussions of potential bad loans. However, solid earnings reports from some companies and positive trade headlines helped turn the tide, pushing the major indexes into positive territory. This highlights the market's sensitivity to both macroeconomic and company-specific news. It's like a seesaw, constantly shifting based on the latest information. The week ahead, inflation data and earnings bonanza, but here's where it gets controversial. While trade talks are dominating headlines, critical economic data is also on the horizon. Consumer inflation data, due out Friday, could significantly impact market sentiment. This report will be closely scrutinized by the Federal Reserve as they prepare for their policy meeting on October 29th. With many job market figures still unavailable due to the ongoing government shutdown, now in its third week, the inflation data takes on even greater importance. Will it confirm the Fed's current stance or force them to reconsider their approach? A surprise increase in inflation could trigger fears of further interest rate hikes, potentially dampening market enthusiasm. And this is the part most people miss. Earnings season is in full swing. Over the next 5 days, around 80 companies in the S&P 500 are scheduled to release their financial results. Keep an eye on major players like Coca-Cola, Netflix, and Tesla. Their performance will provide valuable insights into the overall health of the economy and the resilience of different sectors. For example, strong earnings from Tesla could boost confidence in the electric vehicle market, while weaker than expected results from Coca-Cola might raise concerns about consumer spending. Each earnings report is like a piece of a puzzle, slowly revealing the bigger picture. Other key indicators on Monday. The yield on the 10-year U.S. Treasury note remained relatively stable at 4.01%. The U.S. dollar saw a slight increase of 0.1% against a basket of other currencies, while gold futures experienced a significant jump of 1.4%, reaching $4,273 an ounce. These movements reflect investors' risk appetite and their assessment of the overall economic outlook. Controversy comment hooks. Is this trade optimism a genuine sign of progress or just a temporary reprieve? Some argue that the underlying issues between the U.S. and China remain unresolved and that any agreement will likely be superficial. Others believe that both countries have a strong incentive to reach a deal given the economic costs of the trade war. What do you think? Will we see a comprehensive trade agreement or just a temporary truce? Share your thoughts in the comments below.